So what is causing the stock market to go up today? What's going on, team? It's Ricky with TechUp Solutions. So a lot of you guys might be asking the question of like, well, Tesla is selling off. At least it did right at market open, and so did, not AMD. It was Meta. Meta with a very significant pullback right at market open. But the rest of the market is trying to rally, right? And it's kind of asking that question of like, well, what's the why? Why is the market trying to make new highs, right? And it was actually Apple. Apple had an analyst give a new price target, which pretty much is a short-lived positive catalyst, but nonetheless, it is a positive catalyst. And what this price target was set at was at 199. So it's a Goldman Sachs analyst that gave a price target of 199 for Apple, pretty much just saying, hey, I think Apple is undervalued based off of its Friday close. I think it needs to be 32% higher than what it is, which put it at 199 per share. Obviously, a lot of people buying into it, causing the market to go up. It's not going to change what's to come tomorrow, right? Tomorrow we have Jerome Powell speaking. So just to make sure that you guys are all aware, we have a live speech from Jerome Powell on Tuesday, which is tomorrow, March 7th, and on Wednesday. Like I said, I'm thinking of hosting that live stream. I'll leave it up to you guys. Get this video to over 1,500 likes. I just want to make sure enough people show up, and I'd be more than happy to host that free live stream. If you don't like it, then I won't go live, right? That's simple. So make sure you drop a thumbs up. Make sure you subscribe to the channel, but just wanted to make sure that you guys were aware of that. As well as what's to come this week. Well, we just had factory orders being released, but what are significant economic reports that are being released this week? We have initial claims and continuing claims, which is released on a weekly basis. That's the people that are filing for unemployment for the first time and the people that continue to file for unemployment. Now we have non-farm payrolls. This is where there was that big discrepancy, right? Last month when this thing was reported, we had an expectation of like 280 or 290,000 new jobs being created, and it came in at 517,000. The market did not like that. So now pretty much we're waiting to see, hey, are more jobs going to be created than what is expected? What's the current expectation? 205, right? When we look at the overall unemployment rate, we're currently sitting at 3.4%. Our current expectation is 3.4%. I would actually expect unemployment to go down, and let me explain why. You guys can agree or disagree with me in the comment section. One of the main reasons why I can see the market actually reacting in a negative way is because these initial claims and continuing claims, and please, this is all public data. You can look into the ones that have been released for the past 4 weeks. They have all came out to be lower than expected. So based off of our previous reporting, how can we expect unemployment to stay at the same rate, 3.4%, when every single week less people are filing for unemployment, meaning either more people are getting jobs and or don't need to file for unemployment because more jobs were being created. So what I think, and again, this is just my opinion, I think non-farm payrolls is going to come in hotter than expected, meaning more jobs were created than what was expected. And I think the unemployment rate is going to come in lower than expected. And again, the Federal Reserve will most likely not like that, because if they're showing a strong labor market, but they're also showing weaker economic data, which is going to be determined on March 14th, which is the next CPI data report that's going to be next week, right? We will see how the market actually reacts to that, because the market could rally right now, right? The market's making new highs. We have these market analysts continuing to try to push these stocks higher and higher and higher. That's great. But how long will that last, right? When that economic data is released, the Federal Reserve is going to have to make a decision. Are they going to raise interest rates 0.25% or be more aggressive? And right now, what's factored in is that they're going to be less aggressive, so only at 0.25%. If they do raise interest rates or give any signs tomorrow or on Wednesday during Jerome Powell's speech, if he gives any hints of being more aggressive with future interest rate hikes, you guys better be ready for the market to pull on back. You guys heard it here first, okay? So just wanted to make sure that you guys were aware of what's causing the market to go up. If you have any questions, feel free to reach out to me via Discord or via Instagram, which is the first or third link in the description down below. And friendly reminder, again, we are hosting our GTR giveaway for every new member that signs up for Learn Plan Profit 2.0. That is a total of 5,000 automatic entries for the GTR giveaway, or $50,000 cash. Another way that you can enter is by heading on over to shoptechbuds.com or the fourth link in the description down below. And for every $1 that you spend on the site, it equals 5 automatic entries. That simple, right? So again, if you have any questions, feel free to message me. If not, I will see you tomorrow for our live session, but you need to make sure you drop a thumbs up, subscribe to the channel, and turn on your post notifications so YouTube alerts you when it is that I go live. We'll see you later, team.